Are you a renter dreaming of owning your first home? Confused about whether to choose an FHA or a conventional loan? You're in the right place. In this video, we'll break down the key differences between these two popular loan options so you can make an informed decision. And don't forget, all this information and more is covered in our Fire Your Landlord free education course. Let's dive in. First things first, what exactly are FHA and conventional loans? FHA loans are backed by the Federal Housing Administration, making them a great option for first-time home buyers. Conventional loans, on the other hand, are not insured by the government and are available through private lenders. Both have their own sets of advantages and requirements. Let's talk about FICO scores. For FHA loans, you typically need a minimum FICO score of 580 to qualify for a 3.5% down payment. If your score is between 500 and 579, you might still qualify, but with a 10% down payment. Conventional loans usually require a higher minimum FICO score, generally around 620 or higher. The higher your score, the better your loan terms can be. Down payments are another key difference. FHA loans require a down payment of just 3.5%, which is great for those who might not have a lot of savings. Conventional loans typically require a larger down payment, usually around 5 to 20%. However, putting down a larger amount can help you avoid mortgage insurance and get better loan terms. Next up, debt-to-income ratios, or DTI. FHA loans are more lenient, allowing for a higher DTI ratio, up to 57%. Conventional loans, however, generally prefer a DTI ratio below 50%. Keeping your DTI ratio low is essential for improving your chances of loan approval and securing better interest rates. Mortgage insurance is a crucial factor to consider. FHA loans require mortgage insurance premiums, or MIP, that are 0.55% of the loan amount. This insurance stays for the entire term of the loan unless you put down at least 10%, in which case it can be removed after 11 years. For conventional loans, the private mortgage insurance, or PMI rates, can be much higher for borrowers with lower FICO scores and can be slightly lower for those with higher scores. The good news is, with conventional loans, PMI can be removed once you've reached 20% equity in your home. Interest rates are slightly different as well. FHA loans tend to have lower interest rates compared to conventional loans. However, the overall cost of the loan, including mortgage insurance, can sometimes make conventional loans more attractive for those with higher FICO scores and substantial down payments. So there you have it, a quick comparison between FHA and conventional home loans. FHA loans are great for first-time home buyers with lower down payments and credit scores, while conventional loans can offer more flexibility and savings in the long run if you have a higher credit score and can afford a larger down payment. Remember, all these details and more are covered in our Fire Your Landlord free education course. Thanks for watching, and happy house hunting.